Hello, everyone, and thanks so much for coming along to today's webinar on one of the biggest changes in financial regulation in the UK in the last few years, the Consumer Duty. We're just over a year into the Consumer Duty for open products and a few months into the deadline for closed products. Over the last year, it has been a focal point for the Financial Conduct Authority, and we've had plenty of speeches from senior officials in recent months as they make this the new normal for their supervisory oversight, and of course within the financial sector as well as firms grapple to get to grips with the new normal. And today we're going to be unpicking some of, I think, the biggest and most pressing issues in getting to grips with Consumer Duty. But before that, I wanted to give a quick summary of what we do at Vixio. So at Vixio Regulatory Intelligence, we are a regulatory technology company and a trusted source of independent, authoritative and actionable regulatory intelligence for compliance, regulatory strategy and development professionals in highly regulated industries undergoing rapid and radical change. We deliver comprehensive, time-sensitive and actionable intelligence on payments and gambling compliance, covering more than 180 jurisdictions across the globe and organised by product or service type. And when it comes to the Consumer Duty, it certainly has never really strayed that far from our day-to-day work, whether that is updates on horizon scanning or news stories in our editorial work, which brings me to what I do. So I am Jimmy Franklin, and I work as a senior journalist at Vixio Payments Compliance. My role includes looking at some of those huge regulatory developments that are taking shape at the moment in the payments and crypto space. And in recent years, that's included looking at the Consumer Duty as well as similar rules being implemented elsewhere. So that includes the EU's revised payment services regulation, but also requirements being extended in jurisdictions such as Singapore. So now I'd like to turn to our esteemed speakers today. We've got a really good bunch with us to talk about some things that are going on. John, let's start with you.
Thanks, Jimmy. Hi all. So my name is John Gidler. I lead the payments compliance function at Vixio, responsible for all things reg change and content.
Fantastic. And Suzanne, if we can come to you.
Hi, Suzanne Homewood. Excuse me, I'm Managing Director at MoneyHub. We are an open banking, open finance, open data platform. So data insights and obviously Consumer Duty is a big part of what we're helping firms overcome.
Fantastic. And last but not least, Stuart.
Thanks, Jimmy. Good morning, everyone. Stuart O'Sullivan. I'm an Associate Director at Proactivity, and I lead our regulatory change and compliance team, assisting our clients with the implementation of Consumer Duty.
Fantastic. So jumping straight into the questions, it would be really good to look at some of the big issues that come up with Consumer Duty. And one of those things that I've seen come up quite a lot, the FCA released a report on it the other day, is fair value. And I think it'd be great to know, how do we define that for e-money and payment institutions, and what are the implications of that? John, I don't know if you want to start us off on that.
Yeah, no, of course, Jimmy. I think fair value is an ongoing space that's, I guess, in conversation across all sectors. I think specifically for the e-money and payments institution, it's kind of really looking at, are you presenting good value for the customer? And I think we need to think above just pricing and think about the benefits that the product provides. Possibly thinking about the kind of overall structure of the product, and then really zoning back into, are you providing for the customer?
Fantastic. And Stuart, do you have anything you would add to that?
So I think fair value and the price and value outcome is one of those outcomes which firms have really struggled with in the implementation of Consumer Duty. It was interesting watching Sheldon Mills talk at the end of the first year of Consumer Duty, where he was talking about price and value being the focus, together with outcomes monitoring going forward for the FCA. Because I think from a regulator's perspective, they still feel that firms are a little bit uncertain as to how they come at and how they decide what fair value is. There has been, as you referenced there, Jimmy, some recent feedback from the FCA, and I think we'll continue to see that. But fair value is one of those things where no parent likes to call their baby ugly. So it's very difficult for firms to say our product doesn't offer fair value. But you do, as an individual firm, you do need to take a look at your product or your service. So for a payment service provider, it would be the service that we provide, break it down into its constituent parts and think about our target customers and are we providing fair value to them. You can do benchmarking, you can look to the left and look to the right, but sometimes when you do that comparison across competitors, you all kind of go towards the same place. That you shouldn't take too much comfort from what others are doing. You need to come up with your own approach and then go through the right governance to satisfy yourself that you think your service is providing fair value. So it's a difficult one, but one which you need to work through in a methodical way.
Yeah, absolutely. And I think, I completely agree. I think that the FCA will keep bringing reports out over the next few months. It doesn't really sound from speeches they've done so far like they want to be knocking at firms' doors just yet on enforcement. So, I think that, good and bad practice is certainly going to be going forward. And with the FCA's expectations for outcomes monitoring under the consumer duty rules, how can firms demonstrate compliance effectively on that? John, as a former FCA employee, I don't know if that's something that you were able to elaborate on slightly.
So I guess from my perspective, it very much looks at good governance and thinking about how are you kind of tracking your data, thinking about have you got the right metrics in place to consider what delivers good outcomes. It always, in my opinion, would also come down to doing dip testing and thinking about potentially doing outcomes reviews, measuring what the customer's kind of expectations are and have you delivered aligned to the customer. But I think a big area that will present opportunity as well as potential risk is thinking about how we use data in those scenarios to really both benefit the customer, but also think about, are we utilizing data in the right way to drive good customer outcomes?
Yeah, absolutely. And Suzanne, at Money Hub, I feel like you guys have been particularly enthusiastic about the consumer duty. How has it been demonstrating that compliance in the first year?
Yeah, and I guess we'll probably come at this slightly differently. So the recent report from the FCA on this was about the outcomes should be considered holistically and evidence should be proportionate, which is really great to see from the FCA, because the challenge is, you're a big bank, you've got access to lots of data, lots of people, lots of process, lots of systems, versus a smaller organization who could be more agile and fleet of foot, but maybe don't have the resources to be able to do that in-depth analysis and control. But I guess our view of all of that is, as you just said, John, is all about the data. And firms are, go back to the comment you just made about fair value. Firms are using data they've used for years and trying to put it into a different format, as you say, looking at their baby and saying, well, does it look right? Could we do something different with it? Whereas actually, I think they should be looking at the data and thinking, can we do something different with the data? Can we get more data? Can we get different data and understand our customers better? It's the product is the product at the end of the day, and the product is there to do a job. However, does that product suit every customer for the whole lifetime of their journey with that product? And that's the challenge I think organizations should be considering how they overcome. Consumers' financial lives change. What they need today is going to be different tomorrow, maybe because of circumstantial, good, bad, indifferent, disaster to new jobs to whatever it might be. And therefore the ability to react and adapt as customers' financial situation changes is, for me, a better representation of fair value. Fair value should follow a consumer's financial life. And some products are obviously for life, some aren't. And let me give you an example of that. One of the examples that is used a lot is in savings. And where people have lots of money in either very low savings accounts or current accounts with no interest. But what are firms actually looking at? Why why consumers have got that money in those accounts. That's the important thing. We all make choices. We all make informed, sometimes badly informed, but we all make informed choices. So if the organizations can understand more around why I've made that choice and then help me make a better choice, those are far better outcomes and far more sustainable. Because a one-off, you should move it to X account, doesn't help me understand why I should move it and if I should change again or what I should do if things change. So I go back to this holistic view of customer alongside product, alongside term. So those three things together, things change, things adapt, customers change, finances change. How do organizations take that into account when they're evaluating outcomes and then evidencing how they've helped? Because they can't make customers do stuff, but at least they can help advise them to make better decisions for themselves.
Yeah, absolutely. And do you think there's any kind of opportunities in this step change and how you view customers? You know, like obviously there's this way of harnessing data, so maybe even getting to know or like understand customers more. Yeah, it'd be good to know if there's any opportunities that come with the consumer duty firms.
Sorry, who was that to, Jimmy?
Oh, Susanna, I don't know if you want
to me. Yes, yeah. I mean, absolutely. Of course there is, and you know, Sheldon has been really clear about this. He thinks there's huge opportunity here, and we would agree. You know, continuing what I was saying about the use of data. I mean, we're an open banking, open data provider, and the amazing thing about using data, so making sure it's categorized properly, that you can understand where people are spending their money, look at the implications of how they're spending their money over time, and then bringing that into existing data. So where, you know, a small mortgage company is only going to get manual data feeds, bank slips, verification of salaries, all that kind of stuff. Using something like open banking or open finance data, they can get a far better, up-to-date, live view of people's affordability and therefore make better recommendations for the right products. Banks have lots of data, but it tends to be siloed, revenue driven by product, tends to be singular view. Open up that data, look at the transactions, get more richness and granularity on the transactions and therefore spend behaviors. Maybe bring in open banking data to look at all of those data feeds that customer has, all of the financial spending. So not just the account they have with that particular bank or insurance organization or whatever it might be. What additional data can you add in, and then how can you evolve that? And same for e-money. Any organization using more data can help you make better product decisions and better customer recommendations for fair value.
Yeah, absolutely. And John, I don't know if you know that as well.
No, completely. I mean, completely agree. And I think actually the competitive advantage, you could also consider it as, if you break down the 4 areas of consumer duty and truly kind of embed that into your business practices, the knock-on or the positive implications would be customer retention, because you're truly providing a fair value or a product that fits for the customer. So you essentially gain a stickier customer, but actually you're delivering the right outcomes, which means there's less need to potentially look away. I think that ties in nicely with some of the sectors and actually really looking at, are we delivering fair value? Is it priced appropriately? But the competitive advantage truly is that the customer is getting the right product or the right service and it fits them. And that applies across all sectors.
And now that we're a year into the open product rules, or just over that, it was in July, are there any sectors that you think are being singled out by the FCA at the moment, or that you think that the FCA perhaps would want to prioritise to investigate a bit more? Stuart, I don't know if you can take that one.
So I think what we've seen in the first year and some of the early interventions that the FCA have done is them trying to give a bit more clarity on their expectations, and alongside that, the FCA also trying to use the new powers that they've got through consumer duty to try and solve some of the previous failings that they saw in market practices. By that, I mean, we've seen early intervention in the cash savings market, for instance, and the FCA tracking through competitive tables where people sit and then challenging firms on how they're communicating changes to savings rates for customers. We've seen early intervention in investment platforms, which carried on work they were doing pre-implementation of Consumer Duty. We've seen further work within the general insurance sector, which started pre the implementation of Consumer Duty. So the sectors they've been involved in so far have pretty much carried on historic supervision work. And I get the sense that the FCA felt that pre-Consumer Duty, they didn't really have the powers to do some of the things that they want to do now. Because if we take investment platforms as a for instance, they've spoke about double dipping, same on cash savings. They really are trying to shift the market. I think we'll see them continue to move in sectors where there are known business model issues, and firms need to really look at their business models. Hence why price and value becomes such an important thing. FCA will always say that they're not a price regulator, but they'll challenge firms on trying to ensure that they can justify the balance between price and the benefit that the customers get. There is also signs that the FCA are going into other sectors now where they haven't previously gone into before. So the protection market, for instance, there's a market study just been announced there. But I think Sheldon was quite clear that we want to get outcomes monitoring sorted and expectations clearly set across firms in the next wave of Consumer Duty activity. And they want to focus on price and value. So if you're going to focus on two of the outcomes, or one of the outcome, price and value, and how you monitor your outcomes in general, that should be kind of where you should focus. And I don't think they have any particular focus on a sector apart from historic stuff. I would say in relation to the payment sector, there isn't too much of a focus at the moment, or too much intervention that I see from our clients. There's a lot from an AML perspective still around payments, but I can see the FCA getting more interested as they kind of as they challenge firms more, and as outcomes monitoring becomes an issue which they want to speak to in the larger population of firms.
Absolutely. John, is there anything you wanted to add to that, particularly on the payment side?
No, completely agree. I think from my experience, both as a supervisor and a case officer in authorizations, looking at e-money and payments firms, I could see where I completely agree, Stuart, that the energy might not necessarily be there at the moment, but I think it's a cultural thing to adopt, and being a kind of somewhat new sector that's growing at pace. I think firms should be kind of really thinking about Consumer Duty from an end-to-end life cycle, and thinking about, are we embedding the right cultures? Time and time again, especially with early startups or growth startups, you see commercial incentives that push forward, which is great for the business, but then are you leaving behind the core values of Consumer Duty, and essentially having the unintended consequences of maybe not delivering fair value, which we'll likely see scrutiny in the sector and as time goes on.
Interesting. And keeping on the payments and e-money wave, what should payments and e-money firms, I guess, follow to ensure that their customer communications meet the requirements? I think that customer communication is one of the things that has come up quite a bit in terms of conversations I've had in the last year about this. Stuart, I don't know if you wanted to start off with that.
So from a customer comms perspective, again, there hasn't been a great focus on the consumer understanding outcome as yet, but it's one of those areas where it was a new area. And if I look at some of my client base and some of the areas they needed to develop more, it was one of those areas where, and we were talking about data earlier, it was one of those data gaps that they just had inherently. So do they do customer communication testing? Do they check that customers understand the service that they should be getting? Is there any intelligence they get from customer interactions, which might suggest customers weren't clear about an area of the service that was being provided, the product that's being provided. So getting richer data on customer behaviour and whether that points to a failure in your customer communications, I think is a really rich area of outcomes monitoring data to get. But I think firms don't have that at the moment. What I have seen a lot of firms do is use. I think we were talking in the previous conversation about artificial intelligence and the use that can be made of that. I've seen a lot of firms use things like AI for looking at their customer communications and improving kind of reading ages or making sure tone of voice is right within comms. So there's some good use there, but it's definitely an area where I think that there needs to be more improvement, more data, and more evidence of firms doing some activity there.
No, absolutely. And I think chatbots are a really interesting one in that regard, because I mean, like, sometimes it can be really helpful, certainly for like things like signposting, like when I've used mobile banking recently. But then at the same time, I think when you need something resolved quite quickly, it can be quite good to have that human side. So yeah, certainly something I think can be considered with the consumer duty. And Suzanne, is there anything you wanted to add when it comes to customer comms? Like how has that been implemented at MoneyHub after consumer duty?
Yeah, well, the communication, obviously, as an open banking provider, it's a consented journey, whether that's through PIS or AAS payments or account-based services. So being really, really clear, to Stuart's point, of the clarity of what your customer is going to do is super important, so they understand in plain language, not jargon language, not language we use in the industry, but in consumer language, what they're just about to do if they're authenticating for an account to an account payment, or they're sharing their data for a loan, for an affordability check, whatever it might be. And I think, you know, that whole, I was at dinner last night with a customer, and we were talking about advice for guidance, that usual stuff that comes up, you know, and there's so much organizations could do if only they were less hampered by the concern of stepping into advice. You know, the average consumer doesn't understand financial services. Why should they? And Stuart, you just said that point of speed. You know, when you want to do something, if you're paying for a product, or you want to move money to pay somebody, or to a friend, or whatever it might be, you just want to get it done. You just want it to happen and move. So it needs to be fast, it needs to be slick, it needs to be clear, it needs to be presented in such a way that the customer understands what it is they're doing, but that also firms are really, really conscious of how that implication looks for fraud or risk of customers misunderstanding what they're doing. And there are ways to get around that, and I think, you know, the bots AI is helpful because, again, you can be responsive to people, but it needs to be quick. I'm sure we've all got some great examples where you've tried to pay somebody for something or move money, and it's been super slow, and adding multiple stuff, like, you know, who wants to input their bank details? I just want to pay something just before this call, actually, and it's like, putting my bank details. I really don't want to have to keep doing that. It's really annoying. We all get impatient. We all get so used to speed. And there are other solutions out there. Open banking is a great example of how you can transfer money really quickly, and it's direct account to account. So yeah, I think the communication point is really important, that we always look at this from a consumer perspective in how we explain stuff.
Absolutely. And I think actually with I was also looking to send some money this morning, and they sent through their bank details, and I was just like, oh my god, I'm going to have to fill these out, and it does take like a day, so it's actually quite frustrating. Yeah, and I suppose, like, with a consumer duty, one thing that's been on my mind, you know, FCA is certainly a regulatory leader globally when it comes to writing rules, and, you know, whenever I go to Brussels, people often feedback how much they miss the FCA's input over there. So with something like the consumer duty, which is certainly, I guess, quite an interventionist piece of regulation, although they're very flexible rules, I wonder whether it's going to become a bit of a global standard and whether we're going to see things similar being put in other consumer protection frameworks elsewhere. John, I don't know if that's when you can jump in on, because obviously, like at least we do look at places beyond the UK.
Yeah, of course, Jimmy. I mean, look, treating customers fairly. I think we'd probably all agree that across various sectors or jurisdictions has always been a thing. And again, in agreement, the FCA is typically forefront of making those kind of front-leading decisions for putting the customer at heart and kind of moving towards an outcomes-based regulation. So we've seen in Asia, Hong Kong and Singapore specifically, they've introduced fair dealing principles, which are very akin to, I guess, a hybrid of maybe somewhat treating customers fairly in terms of transparency in their requirements and ensuring good customer outcomes. In the US, we've got the CFPB, so the Consumer Financial Protection Bureau, is releasing their transparency rules, which again is very much focused on fair dealing and fair value. It will be interesting how things kind of span out there, and actually will they take lessons learned and will they take on what we're doing in the UK from a consumer duty perspective. Australia's got things, they've been around for a little while, but the design and distribution obligations, again, somewhat fair dealing focused, ensuring good customer outcomes. So I think it's there, and I think it will only evolve. I think the idea of protecting customers and identifying customer harms early on has always been a principle in the UK. And I think as the sectors are growing, but also becoming interdependent on each other, just thinking about cross-border payments as an example, regulators are learning from each other and kind of avoiding inherent risks in specific sectors.
Yeah, absolutely. So we have had some more questions come in from the audience, and I will just pick up some of those now. So in terms of one thing, actually, which is quite personal considering that it's October 7th when these rules come in, but how does the consumer duty align with other regulations such as the app fraud reimbursement requirements? I don't know if anyone can take that one.
I can jump in, I guess. So APP fraud is, or the app fraud requirements are directly brought into place to protect the consumer, albeit sending and receiving PSP are implicated in terms of the reimbursement model. So I think it's again focused on a good outcome. It's protecting consumers. From my perspective, I think there could be more to be done, i.e. looking at big tech, for example. When we look at push payment fraud, we see a lot of, there's a high percentage of them originating from kind of your big tech providers or social media platforms. So could there be more to be done in terms of driving good customer outcomes? But essentially, I'm supportive of the measures, and I think it's a positive step.
I think it fits in with if we look at open banking PSD 3, which will bring in some of those controls and greater regulations, especially around payments. So yeah, I mean, absolutely. It's sometimes frustrating to see that the technology is being blamed for the fraud, whereas actually it's the onboarding, it's the controls, it's the regulatory elements of both ends of the party that actually, if we get that right, we should be able to eradicate a lot of these elements of fraud, because we're putting in it or keeping it in a controlled environment. That's the whole point of having this open data capability in technology. That's the whole point that the FCA brought this in, was to give more options, but it has to be controlled and it has to be regulated. So bringing in PSD3 will make some big steps forward with that as well.
Absolutely, and I think it's in December that the PSD3 in the UK at least is supposed to be being brought out by the Treasury. We should have to wait and see whether that happens.
Hopefully.
And certainly a lot of people who seem to be saying that at the moment. And then also, like, it'd be good to kind of go a bit more further into detail on some of the biggest challenges for payments firms and money firms. I remember when this was first being introduced, a lot of people said to me that one of the issues that payments firms have is that, one, they maybe not have some of those like soft law guidance and things, when it comes to consumer protection that other industries might have had. but also, payments are over very quickly. I mean, I suppose it's a little bit harder to judge an outcome when something's over very quickly, well, in a matter of seconds most of the time. So yeah, it'd be great to know. I don't know if any of you want to take this, but some of the actual specific challenges that payments firms can have when complying with the consumer duty.
I can drop in my 2 pence, I guess. I think for payments and e-money firms, there's varying types of products and services that they offer. I think one challenge that I experienced both kind of when supporting businesses and just looking through it is payments firms and e-money firms really have to think about the whole value chain, because consumer duty is about the end-to-end life cycle of a product life cycle and value chain from a customer perspective. And then you've got nuanced business models that might not directly deal with a B2C customer or someone potentially deemed in scope of the consumer duty rules, but the unintended or knock-on implications could affect an individual. So specifically talking about the merchant acquiring section there, where they found it, I think some of the sector found it very difficult to understand how do they test fair value given their consumer base, and so on and so forth. So I think the challenges will grow, but I think it's really about understanding the business model that you're in, understanding your pure play customer market or your direct customers that you're looking to engage with, and then reviewing back, are your services and products aligned, and are you providing good customer outcomes, and then taking it a level further and really think about the whole value chain.
Yeah, absolutely.
Yeah, no, I think I just agree with that, Jimmy. It is about understanding your point in the value chain and how much impact you can have on the customer. The customer at the end of the day wants speed in the main through the payment transaction that's going on. So where do you fit within that? Is it clear how you hand off and accept your part in the process? And clear what your service is and the value that you provide, and are you delivering kind of for your customer? Because as I say, speed is kind of the element in a lot of this.
No, absolutely. And just to come back on the AI point as well, one of the questions. So the AI is being harnessed more and more by companies at the moment, and it's certainly the buzzword this year and maybe last year as well. So it's people are always very keen to hear about. How do you think that there's a bit of a? Do you think people are a bit concerned about using AI since the consumer duty came in? Like, how does AI fit in with the consumer duty? Or else that could be a whole webinar in itself. But I don't know if anyone wants that.
I think you could have a whole webinar on AI. AI is kind of resurfaced as the new kid on the block, where it's actually been something we've been using for years. Data insights, using past information to make better future decisions. That in machine learning, I mean, our whole platform is built on machine learning. We've been running it for nearly 11 years now. But I always use the example of oncology. Oncology has been using AI to help improve their treatment of patients. So they'll look into past cases to be able to make, because they always review it together, they'll look into past cases to make better, more informed decisions about how to treat a patient. And that's what we're talking about here. AI in finance is looking at vast amounts of data which we've got on customer spending and spending habits, and being able to make better informed decisions with and for those consumers. AI's evolving into robots and bots and so forth. All that is, again, is using data to present information in a faster, quicker way. That doesn't mean it's infallible. It doesn't mean it's the thing of the future. That it's only as good as the data it's working on. But we're seeing it more and more. Who isn't using ChatGPT? It's a great place to start. I think the challenge should be, if you're going to use it, again, coming back to that advice and guidance piece, does it help I think probably one of the things that we talk a lot about is if you take data, AI, analysis, insight, what that should do is help the experts, underwriters, strategic decision makers, product owners. It should help them, the human brain, make better, quicker, more informed decision making. I don't think anybody's saying you should just take people out of the equation. We should be using that data insight to help make humans be more effective for the people who really need help, vulnerable customers. That's where the power really lies, I think.
Yeah, I'd agree with that. And there are use cases left, right, and centre with the use of AI already from a consumer duty perspective, or from just a good business and a good customer outcome perspective. I know of one client where they're using automation within their telephony process to be able to identify vulnerable customers when they first make a call into a call center, and then channel them through to an agent who can use them a lot quicker. So there's automation at the start of the process, which then gets you into a specific vulnerable customer team, and you can get that customer serviced a lot quicker with the right outcome being delivered a lot sooner for them. And that's just one use case. That's directly customer impacting. But as Suzanne was saying there, firms are using data in order to drive their decision making, to target customers that behave in a certain way, or there are so many use cases at the moment. It would just become, it is BAU, and it would just become more and more used as time goes on.
Yeah, and another really great use case for that is in collections. You know, today, if somebody falls behind with their payments, we put them through a most horrendous process of spending, you know, half an hour, 45 minutes on a call, asking them to recall how much they spend on their groceries every week, which is ridiculous. I've got no idea. If you ask me now how much my electricity bill is, my water bill, okay, I can open my banking app and have a look. But again, did you want it weekly, monthly, annually? What is it? So we put people who are under massive amount of stress through a very difficult conversation where they've got to try and remember what they spend on stuff, when all they're actually thinking is, oh my God, I'm in this really difficult situation. Whereas again, that data, I come back to open banking data, sharing, asking the customer to share their data, the collections agent starts from a point of being informed, and then can, instead of interrogate the customer, they can validate with the customer what they're spending. And we're seeing customers cutting that time down by 15, 20 minutes. And then suddenly this is now becomes a much more consolatory, supportive discussion, rather than, are you sure that's all you spend on your groceries? Because I'm sure it's a lot more. People like you. It's not about people like me, it's about me. I'm in trouble. And that's where I see the power of this is we can really personalized with this data, and then help the human be more personal with that individual who needs help.
Yeah, that's really positive note to go out with. And so as we come to the end of this webinar, I was going to say thank you so much to really for coming along today, because I think it's been a really interesting one to go over. And I'm glad I asked that AI question at the end, because I feel like I got a lot out of it. But yeah, and you know, I'll pass back to Jack now. But if anyone has any other questions, please do feel free to send across to us here, and we'll try and get those answered.
Thank you, Jimmy, and thank you to our speakers. And of course, thank you to our audience for attending today's session. Apologies if anyone experienced any audio or visual issues during the broadcast. As mentioned at the start of the session, this webinar was recorded and a video will be sent to all attendees in the coming days. Finally, if you have any questions about anything to discuss in today's webinar or would like further information, please email info@vixio.com. Thank you.